What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. You know, it's a beautiful moment in the market when separate stories start speaking to each other. And that's what we've got to cover today. On one hand, we've got NIO's sub-brand Onvo about to drop a game-changing SUV. And on the other hand, we've got the US literally handicapping its automakers, well, the EV industry, I should say, with graphite tariffs that are so large, they're making Tesla executives lose their sleep. Before we get into it, NIO closed at $4.92 today, trading at $4.95 in the after hour. NIO's had around a 44% run in the last month. This is crazy. A lot of this clearly has to do with the Onvo L90 rollout, so the market is clearly paying attention to the things that we've been discussing on the channel and what I'm about to tell you. So here's what's happening. July 31st, that's when Onvo officially launches the Onvo L90 SUV. So mark your calendars, people. But here's the beautiful part about this Chinese strategy. Li Auto is launching its Li i8 just 2 days earlier on the 29th. This isn't coincidence, folks. It's calculated. Li Auto's i8 is expected to price between 350,000 to 400,000 Ren, and that's roughly around 49,000 to 56,000 US dollars. And meanwhile, Onvo comes in swinging with their L90 at 279,000 Ren, about 39,000 US dollars with the battery included. That's already a 25% price difference on a vehicle that by most accounts on Chinese social media is winning on looks, weight, and the overall package. Now, I'm bullish on NIO. You all know this, but let me give you an objective analysis here. This pricing strategy tells us three things. First, Chinese EV manufacturers have reached a level of manufacturing efficiency that's really scary for all other automakers. We're talking about a 3-row SUV, not a sedan, at 39,000 US dollars with advanced technology. Second, the competition's forcing innovation at breakneck speeds. Li Auto built their reputation on range extended vehicles, but now they're going pure electric with their i8 and i9 models, and that's purely because that's where the market's headed, and companies like Onvo are forcing their hand. Third, and this is crucial, these aren't just Chinese market plays anymore. When you could produce a competitive 3-row SUV at these price points, you're not just thinking or talking about domestic sales anymore, you're thinking globally. This brings us beautifully to the second story where things get really interesting from a macro perspective. The US just slapped graphite imports from China with tariffs that could reach up to 160% when you add everything up. Let me put that into perspective. Without graphite, you don't have EV batteries, period. And China controls over 70% of the overall graphite supply. Here's the numbers that should make every investor pay attention. Tesla needs 90 kilograms of graphite per Model 3. In 2024 alone, Tesla purchased over 80,000 tons of Chinese graphite. That's 67% of Chinese graphite imports to the US. So we're in this kind of absurd situation where the US government is literally taxing its own industry out of competitiveness. The US White House literally said earlier this year, without Chinese graphite, the US auto battery industry would have to shut down, and then they literally imposed the tariffs anyway. That adds about $7 per kilowatt hour to the battery cost. For Tesla, that could mean $1.2 billion less in annual profits when you factor in the end of the EV tax credits too. Now let's zoom out and think about what this means for all of us watching these markets. What we're seeing is a fundamental shift in competitive advantage. While US companies are getting handicapped by their own government's trade policy, Chinese manufacturers are vertically integrating and driving costs down aggressively. Look what Onvo's doing. They're not just competing on price, they're launching both 6 and 7 seat options. They've got the L80 coming in Q4, and they're building this whole ecosystem around family vehicles. Meanwhile, US manufacturers are dealing with supply chain disruptions and cost inflation from the US government. Here's my take. This creates a fascinating investment thesis. Companies like NIO that have secured supply chains and can manufacture at these competitive costs are going to be well positioned as global EV adoption accelerates. The graphite situation isn't going away. The International Energy Agency predicts that global graphite demand will hit 16 million tons by 2040, 4 times what it was in 2021. China has a complete technical chain from raw material processing to high temperature graphitization. Other countries have have raw materials, but they still send them to China for processing. And here's where it gets interesting. Tesla, the company that basically created the modern EV market, seems to be the company that's most vulnerable to these supply chain disruptions. They're the biggest user of Chinese graphite in the US. Their market share dropped from 75% to 62% in just 1 year, and they're facing policy headwinds on multiple fronts. Meanwhile, companies like NIO are building manufacturing capabilities that theoretically could serve global markets at price points that traditional automakers can only dream of. I'm not saying Tesla is done. I don't want anybody to get this from this video. They're incredibly innovative and adaptive. But this moment represents a critical inflection point where the competitive landscape could shift dramatically. If you're bullish on EVs and the adoption curve suggests that you should be, you need to be thinking about who's going to win the cost game. The companies that can manufacture efficiently, control their supply chain, and price aggressively, they're going to capture market share, in my opinion. The Onvo L90 launch on July 31st isn't just another product launch. It's a statement about where the industry is heading. When you can deliver a family SUV with advanced features at $39,000, you're not just competing in China. You're setting a global standard. The market seems to agree that 33% run in NIO's share price since the Onvo announcement. That's investors recognizing that this isn't just about one product. It's about demonstrating manufacturing capabilities that could reshape global auto markets. All right, everyone, that's it for today's episode of the Courtside Financial Podcast. The EV market's moving fast, and these supply chain dynamics are creating both risk and opportunities that I'm monitoring closely. If this video was useful for you, entertaining, helpful, any of the above, whatever it was for you, please make sure you hit the subscribe button, click the notification bell icon, leave a comment down below. I can't stress this enough. All your engagement really does go a long way in helping out the channel. Let's try to get to 10,000 subscribers, why don't we? Anyways, that's it for this one. I'm Obi signing off. I'll catch you guys in the next installment. Thanks for watching. Goodbye.